Loved it. Haven't seen or experienced an introduction like this. Thank you very much. So in case if you're surprised, these are my moderator notes. Okay, so I hope that's okay for you. We heard before the topic of the panel, proof of profit, mining and staking as a business model. So what actually works, we're taking a look at it from a business model perspective, and we have very nice panelists here. Thank you very much for this. And we're gonna start with an introduction, and we'll make just a short sentence, and then you can introduce yourself. Stefan Kobrc, is it right? Yeah. So from Stereum and Rocklogic. Yeah, you're a managing director and co-shareholder. The company I think is located in Lower Austria. Yeah. So tell us a bit about you and your company.
Hi, thanks for having me. Our company is actually very technical driven. We have a little bit of a staking business with Lido on Ethereum. We run there in the curated set about 235,000 Ethereum. We also run a couple of other Ethereum nodes as well, especially DPT. Sorry. Apart from that, we also apply for different kinds of grants and bug bounties that we find from the Ethereum Foundation, for example. And of course, we also have a non-crypto related IT infrastructure company as well.
Thank you very much, Stefan. Great to have you on board. Let's continue with Matthias Reder from, I love the name, RETTE. So Bitcoin mining practitioner with a lot of banking background, a lot of experience. Tell us a bit about you.
Thank you, Kambis. I'm self-employed with my own finance channel, which is called RETTE, which means rescue your money. And yes, I want to teach more financial education, and especially for the topics Bitcoin and Bitcoin mining. So I'm also a mining expert for Bitcoin Group, which is one of the leading Bitcoin mining hosting provider here in the middle of Europe. And I have my own business, sunplusmining.com, where you can calculate your own Bitcoin home mining solutions.
Very nice. Thank you very much. Next comes Anna Petrenko, an institutional staking expert, Everstake. Tell us a bit about you, Anna.
Yeah, thank you. My name is Anna. I'm Chief Business Development Officer at Everstake. We are the largest staking provider worldwide, managing more than 7 billion in digital assets at staked. With Everstake, our company is around 100 people, where 3/4 of which are engineers. And what makes us somehow special that we are obtaining all the institutional compliance certifications simultaneously, like ISO, GDPR, NIST certification. We are going to DORA, SOC 2 Type 2, and many others.
Love you to have you on board. Thank you very much. Let's continue with Clemens Scarpatetti from Solana Blockchain Solutions. And I've heard before that you already were on a panel today, yeah?
Yeah, so hello again. Thanks for having me. I'm Clemens. I'm CTO and co-founder of Solana Blockchain Solutions. The company has been developed by Science Park Graz in 2021. We are a blockchain operator, a white label services provider, and a staking company, and we also maintain app chains.
Thank you very much. And we're gonna finalize with Stefan Mauracher from On-Chain Austria, the community builder and education advocate here. Tell us a bit about you.
Hello. No.
Is it green? Let me check.
Yeah, hello. So I'm Stefan Mauracher. Yeah, I'm the president of On-Chain Austria. We are like a community-driven node operator in Austria. We started out as a WhatsApp group, basically, of crypto enthusiasts. And some of us were running nodes already, Ethereum nodes especially. And so we thought, why not do this together? And we founded an association. The community grew bigger and bigger, and now we also made our own token, so we decentralized ourselves by making a DAO out of our association. So we're the first tokenized association in Austria, and yeah, so we're a small player in the staking game, but we're we're good at it.
Amazing. Thank you for joining this panel. So we make it in a structured way. We have 4 blocks we're going to discuss with each of you. We're going to start with mining. Does it still work? In case you have some questions in the meantime, you can just raise your hand and we can also try to respond to your question. I want to start with Matthias. I've recently saw an interview of you in the media, several weeks, months ago, where you talked about grid electricity in Austria specifically, which makes Bitcoin mining not so viable, to be honest. But the PV surplus changes the calculation entirely. So walk us through the actual numbers, what hardware, what electricity price, what margin, and so on. Give us an introduction into this topic.
Yes, of course. Thank you, Kambis. I've brought something with me, a full Bitcoin mining hardware machine, a little tiny thing here. Yeah, it works fine because 2 main topics for your success is Bitcoin mining. The one thing is the hardware and the other thing is the costs, the energy costs. If you have cheap access to cheap hardware, or you use the most efficient hardware, which is the newest ones, and you have access to cheap energy, then you can do Bitcoin mining. For example, you asked me about the figures in Austria. If you have some Bitcoin home mining machine like a Canaan, Avalon Q, I calculated today you will make revenue for about 7 euro cent per kilowatt hour. So I don't know who has electricity costs at home, for example, for a private person or as a company, below 7 cents per kilowatt hour. Nobody has in Austria. So everybody, you don't make profit with these earnings, Bitcoin mining. On the other side, you still make profits if your energy costs are 0. If you have surplus energy with your own solar panels, then you can still make profit with your Bitcoin home mining.
Mm-hmm. Thank you very much for sharing this. Great to understand more about this topic. I want to switch to Clemens because Solva went into the validator world rather than Bitcoin mining. So what was the business case logic behind this decision? Tell us a bit more about it.
So obviously, energy consumption is a very different topic for proof-of-stake networks. So if you don't have access to cheap energy, you might as well run validators in proof-of-stake. Or proof-of-stake is like not even the most widely used type of proposer selection today. It's becoming more and more proof of authority, meaning it's like, let's back up a little bit. It's all about proposer selection. So in Bitcoin, you need energy to participate in the network and to actually mine a block. In proof of stake, you need capital, staked capital, to be selected as a proposer and essentially do the same. Participate in consensus and propose blocks. In proof of authority, there is some kind of authoritarian entity that selects the validators of their protocol. So with regards to that, we are participating in proof-of-stake networks, but also in proof-of-authority networks. The incentivization model in proof-of-authority is a little bit more opaque than in proof-of-stake, meaning it's mostly based on bilateral agreements and protocols essentially pay validators to be in their active set. That said, we are live on over 40 networks today in POA and also in delegated proof of stake. And it is a viable business model, although the general environment has changed a lot during the last few years. Meaning proof-of-stake assets have mostly paid for economic security through inflation, and this has historically just hurt token prices. So a lot of these protocols that have not had real protocol revenue, they have essentially spun down, and the general industry is shifting around a lot at the moment, and it's super critical to stay on top of that.
Mm-hmm. So it's difficult to actually see where the direction ultimately goes.
Yeah, it is. I would say it's becoming harder and harder. the gate is closing over time. I think the industry has been very much distributed, and it is becoming harder and harder to become a new operator in new networks.
Thank you very much. And I want to conclude with Stefan, the one with the F, Stefan Kobrc. Yeah. So let's take a look a bit at the Ethereum development. It switched from proof of work to proof of stake in 2022, I think. What did it mean for the infrastructure industry as a whole? And now we were talking about the direction. Does it say anything about the long-term direction of mining as a model?
So I think it's very important to see proof of stake in a different kind of perspective, also about capital efficiency. If you're talking about mining, then you invest your capital into mining machines that are only built for one purpose, and that's mining. If you're using it for proof of stake, you actually get the stake back again, if you behave well, of course, and you don't pay penalties. So this is a major advantage in my opinion for proof of stake. You get the money back, and you don't sit on machines that maybe get outdated in a couple of months or a couple of years. So in my opinion, this is a huge step forward also for Ethereum, and it proves that Ethereum is evolving in the right direction. When it comes to being more resilient and more decentralized, I want to add to the topic that decentralization is also achieved with a low entry barrier. With ASIC devices, this is not so much given as with a very low entry fee into a staking protocol.
Super. Let's stick a bit with Ethereum as a topic and switch to actually a company and the product Stereum. Yeah, is it right, Stereum?
Yes, it's right. It's Stereum Launcher. That's the open source software we built for Ethereum staking.
So it was built actually to make Ethereum node operation accessible to as many people as possible, which I think actually it's a good idea. I kind of like it. What does it actually cost to run on Ethereum Validator today? Hardware, electricity, time, etc. Can you give us make it more tangible for us?
Yeah, so I would not suggest to start now buying hardware because it's very bad for your budget, I guess, if you didn't heard yet. So if you want to buy something used, you can go below 1,000 euro, I guess, to start with a staking machine for Ethereum. It's already solved. We already solved the software problem. It's not only us that solved the software problem with Stereum Launcher that we provide with open source. There are also other kinds of products that do this as well. So this is not really unique to that. When it comes to the returns, it really depends on the capital, of course. With Ethereum, you can go around 3%, maybe a little bit below that. So you would actually need a lot of capital on top of the relatively low cost of the staking machine itself to make a return of investment in a certain amount of time.
Thank you very much. I want to continue with you, Anna. So you already mentioned before when you were introducing Everstake, it's actually size because it's quite big. So I think you managed 7 billion in staked assets, yeah, 7 billion US dollars. Plenty of networks and almost 100% uptime and zero slashing events. That's actually what I made my notes about. So what's the real operational gap between you, for instance, or what you do compared to others, and at what scale does institutional staking actually become profitable?
Yeah, good question. So it's actually not a gap of the infrastructure or of the uptime or of the type of the setup. A lot of companies like Validators doing a great job and great engineers. The gap is mostly on the institutional market requirements, what they need to move forward with the delegation, what they need to allocate their funds. And here is a compliance structure which we need to bring based on our infrastructure, like with all that I mentioned, like ISO, GDPR, NIST, SOC 2, Type 2, and other certification that make them that make them sure that it's a trusted structure for them to allocate their capital. So that's probably the most important point here. And the second one is that we have our own internal slashing fund that, for example, not all the operators can deliver. And we are absorbing the slashing risk from asset managers, from banks, which makes them happy actually, because it's no risky deployment of capital from their side. So that's the structure, and for sure network coverage, because like, for example, Swiss bank don't want to have like 10 providers for 10 different blockchains. Then they want to have like 2 or 3 of them that will be covering all the blockchains and diversify for each of them between the same operators. So that's mostly the most important ones.
You mentioned you have your own fund, what you said, yeah? What's it called? How big is it?
It fluctuates, so we are allocating actually 10% of all our revenue from the Ethereum part to this slashing fund, and right now I believe it's around $1 million for to cover slashing risks.
Thank you very much. Stefan, I want to continue with you with PH. Yeah. So we heard about its sheer size of Everstake and so on. Now let's take a look from the more community-operated infrastructure. So what can you do? What, for instance, these kind of companies, organizations cannot, for instance? What kind of structural advantages do you have here? What would you say?
Yeah, so for me, I mean, it also everything comes down to a basic fundamental question, right? Why are we here? Why do we love blockchains? And the answer is we love the traits of the blockchain, the permissionlessness, the robustness, the liveness, and the censorship resistance. And that all comes from one aspect, and that's the decentralization. So we need decentralized blockchain. So our association's purpose is actually to keep blockchains decentralized. And how do we do that? We educate people on how decentralization works, how they can run their operators on their own, and also we provide for those who cannot run their own operators, we provide the infrastructure. Right, so that they can participate in the decentralization. So that's our purpose, and I mean, Everstake for sure does a great job, and they have a great product. But one entity that controls 7 billion in stake, right, is not the decentralizing force; it's a re-centralizing force. So, as we heard before, we need many entities like us to keep everything decentralized, and we need people to stake their tokens and their coins with entities like us also. I'm sure, I know institutions can do that. They need a lot of compliance stuff, but retail can do that. So that's the one thing that makes our thing important. Now you could argue now, if we do a good job as Everstake does, then we also accumulate a lot of stake and we become a re-centralizing force again. But there we have the trick, right? We decentralized ourselves. We make our own governance token. We're controlled by a DAO. So in a way, we are. If we become too big, which we don't, which we're far away from, we would be decentralized ourselves. And from terms of profitability, we run like an open source project. We don't even have employees. Everybody who is a member in our association is contributing voluntarily, and it's all run by our own token. So basically, we only have server costs. And that's why we also can provide a very competitive staking fee. Ethereum, for example, we will run it for 4.95% compared to 10% of all the big ones. So we're profitable in a way for us as an association, but we can't compete with the big ones, of course.
Thank you very much. Let's move to the next block about restaking, ETFs, and new models. I want to start with just a short introduction about restaking. Restaking, for those who are not actually used to this kind of word, I would just want to explain it shortly, allows already staked Ethereum to be reused to secure additional protocols, generating extra yield, but also introducing additional slashing risk. With this in mind, I want to continue with you, Stefan. Restaking via Eigenlayer, for instance. You're running Ethereum infrastructure every day. So is restaking a credible additional revenue stream? How do you see it?
I think restaking is a very early stage right now. It has its place, but the additional yield has also additional risks, and they are sometimes even below what you actually would see, because you think that restaking just stakes the liquid token that you would get again. But that is not the case, because you need also DeFi in between that. So you actually add, with one loop of restaking, you add 2 more layers. That's DeFi and another staking layer, staking protocol, for example. So you add actually 2 instead of 1 layer. So in my opinion, it is still very early to talk about how effective and trustworthy restaking is, simply because of this fact, because it's so early. We can think about big staking providers like Lido exploring restaking, as well as others like Kepler, and they just got a hack in their chain of restaking that resulted in a funds loss. And if you just add up the numbers, they don't add up get the damage done in 10 years. So this is basically a bad example for restaking, because it shows you how risky it actually is. What happens now with this is the protocols start to bail it out, and actually we built blockchains to stop bailing corporates out, right? And now we do it again. So I don't think that's the right way right now to do restaking, also with Eigenlayer.
So advantages, but also disadvantages because of the higher risk. So a question to all now, with this in mind, what we have already discussed about. What is the single most profitable infrastructure model in blockchain right now, in your opinion? Solo staking, operator service, liquid staking, whatever is there. Anyone who wants to start first on this? Yeah.
I'll take this, because staking is actually only a small part of our business model and revenue. So for us, it's operator services. We do a lot of white labeling for institutions, for foundations, for market makers. This is all very operations and production focused, but it is a more clear revenue stream than staking is, because we're not so much reliant on token prices. Obviously, if token prices go down, our clients kind of make less money than they did before, and that may mean that we get less contracts, but for us it's a little bit easier to calculate in general, I would say.
Thank you very much. Any other thoughts? Hannah?
Yeah, from our side, I can also add that staking itself not only the source of the revenue for staking providers or operators. For example, a good potential in terms of the revenue shows infrastructure products. For example, like we are running a lot of them on Solana ecosystem, and the worse the market condition is right now, the better the revenue stream, let's say, from the infrastructure product as well. Like it's an additional layer and additional inflow that allow to stabilize the economic and commercial models on a downtrend or tough market conditions.
Thank you very much. Any other thoughts? Yes, please.
Yeah, so as we heard before, it's a race to the bottom with the big chains. If you're trying to be profitable in Ethereum, in Solana, it's really hard. It's really competitive. So I would say find some niche project, some little thing. For us, it's NYM. That's a decentralized VPN service where you really can chill your IP, and even the VPN service doesn't know your IP. So it's really decentralized. And this one thing is more profitable for us at the moment as our Ethereum staking operation, for example. So that's my answer.
Very good to hear, yeah.
Yeah, for us, it's a combination of staking as well as non-crypto IT infrastructure and exploring crypto infrastructure on a somewhat research level. That's, for example, bug bounties, what I mentioned earlier. These three combined provide us pretty steady cash flow and makes it possible for us to sustain also like markets like right now. And on top of that, it's fun.
Thank you very much. Matthias, you want to add something? Or
just the most profitable thing, I think, is solo mining on proof of work of Bitcoin blockchain. If you succeed, then you get 3.125 Bitcoin. I think that's a lot.
Very good. Thank you very much. So we're going to conclude with the last block of our today's panel about regulation, Austria, and a bit also an outlook. I want to start with you, Matthias, but before that, let's start with just the actual regulatory framework at the moment. So MiCA, as I think a lot of you might know, has been fully enforced since the end of 2024. In the US, for instance, the SEC, etc., also a joint release in March 2026 classified staking rewards as non-securities, a significant turning point in actually the world of mining Bitcoin, crypto, and etc. Before we had, actually when we were preparing the panel, you said you're not the tax experts, but we're gonna dive a bit into this topic, not too much, don't worry. So to start this discussion, Austria introduced a 20.5% flat tax on staking rewards start I think 2024, while Bitcoin mining is taxed as commercial income. So with that in mind, what is the difference between a private and a commercial miner?
It's a huge difference, and there is no final information from the tax regarding to your private mining project at home, especially with surplus energy. So the 27.5%, that is clear, but it depends if you can write off your own hardware when you buy it. Usually, if you do it as a company, as a private person, you don't have this access for description, for writing off the hardware. And in that case, it's even better here in Austria if you do your own mining with your own energy resource. It's better to do it as a company, because as a private person there are a lot of topics not clear, and so my suggestion is to go to a tax advisor, go to 2 tax advisors, you will get 3 opinions.
Very good,
But you have to do that because it's not quite clear as a private person. It's really quite clear if you do it as a company. So also with the things, the hardware buying to write it off and so on, it's better to do it as a company.
Very good. Anyone wants to add to this topic? No? So, because we're already nearing the end of our discussion, so I want to end it with what is the one single thing that the audience should take away for someone actually, or for people who are interested in this kind of topic when it comes to mining, staking as a business, what could work, what couldn't work, and I want all of you to give a short input on this. Okay, and we're gonna start with Stefan first.
Yeah, sure. So decentralization is probably the most important thing of all blockchains. Doesn't matter so much how many big or small companies there are, but if it's just a handful of companies or block builders or validators or stakers or however you want to call them are controlling a network, then that's way too less.
Thank you very much. Matthias.
If you have access to any energy resource where you have no alternative to use it or to monetize it, the only alternative is to do Bitcoin mining if you want to monetize your own energy.
Great. Anna.
So yeah, the main indicators on the market right now, just to sum up, probably it's the legal frameworks for sure, like SEC, Clarity Acts, and staking rewards is not a securities, it's clarified. And in Europe, we have like MiCA, we have DORA. Seems like everything is clear from the regulatory and legal compliance frameworks. On the other side, so we do have ETFs, we do have a demand on these sides, and it confirms that the market is growing towards such a direction. And for sure, like for the institutional clients, for banks, funds, asset managers, and other institutions, the deposit window is open right now. So the staking in such conditions become not a question of whether to do it or not, or a question to with whom and under the which regulations and under the which government entity to move forward with this. So like the deposit window is open and it's a good time to move it right now. Thank
Anna,
you.
great, thank you very much. Let's continue with Clemens and then Stefan.
I would very much, very much agree with what Stefan said before. Decentralization is definitely the most important topic. We have seen recent incidents, how much worth is decentralization in the case of the Kelp DAO layer 0 hack, at least $200 million. And in the recent past, I think decentralization aspects were a little bit neglected, and the market has shifted towards more centralized structures. So this is something that I want to emphasize. It's important to think about why we're here. It's decentralization.
Thank you very much. Stefan.
Yeah, so decentralization is a common good. We all have to do our part, especially if you're retail, like park your coins with your local community-driven validator. Do it like with buying your vegetables at your local farmer. So stake your coins, not with the big guys running out of the Cayman Islands, which are top on the list. Mm-hmm. Go on the page 2 or 3 in the validator list.
Like that.
Thank you.
I think you said 2 minutes. Yeah. If there any audience questions, we have 2 minutes time. Anyone who wants to ask anything, yeah, to the panelists. No one here? I mean, there will be time afterwards for, I guess, one-on-one discussions. Yeah, then I think we can run it up. We're finished. Thank you very much. Big applause for the panelists.
Thank you.
Thank you.